Good morning, everyone. Thank you all for coming. This is our second time coming out to the Villages to do a presentation. We're here today to tell you guys a little about our company, Capital Fundings, and our new offering, Capital Fundings Mortgage Fund 1. So I am the owner and operator of Capital Fundings. My name's Alex Bogomil. I think you'll see it in there. So let's get started. I usually like to ask everybody, just so they have a general idea, kind of what we do. Has anyone ever heard the term fix and flip? Yeah? Does anybody watch any of those shows on TV? Fixer Upper, Fixer Flop, there's all those. A lot of people watch them. But anyways, so that's what we do. We lend money to those people. The people that are buying the distressed houses, that come in, that fix them up, list them and sell them, or sometimes they keep them as a rental property. So we lend money to those people, those investors. We'll lend money for the purchase of the property, and we'll lend money for the renovations of the property. Has anyone ever invested in a mortgage before? Yeah? Was it fairly easy?
Well, yeah, it is fairly easy to give the money. There's no problem at all.
Yeah. Okay. Well, what investing in mortgages for us, we do loans that are 1-year interest-only loans. So generally, it's going to be a short-term investment at a much higher yield than a typical CD. So we find that a lot of people that are looking for monthly income, it's a attractive investment for them. So what we've put together is a kind of an overview presentation of Capital Fundings, just so you can get an idea of who we are. I'm Alex Bogomil. I'm the owner and operator of Capital Fundings, LLC. We're extremely proud to say that in 2023, Capital Fundings was the leading private lender by originations in the Central Florida market. And we had over 115 5-star Google reviews for a 5-star average. We believe Capital Fundings stands out for several reasons. One, we're local. We understand the markets here in Orlando and Central Florida. Two, we can move fast. We can close. We don't have to do third-party appraisals. We don't have to do all the other requirements that many of the national lenders require you to do. And most importantly, we've been there. We've seen the investment process from start to finish, and we can add value to our borrowers, sharing that knowledge with them. 80% of our borrowers are repeat borrowers. Once they come and experience Capital Fundings and everything we offer, they like it and they do more loans and more business with us.
As I'm talking to you today, I'm sitting in one of my renovations. I have 3 other renovations going, all financed through Capital Fundings from the beginning to the end and then beyond. They are a phenomenal local resource for the state of Florida.
So I invite you to inquire about Capital Fundings and becoming an investor yourself. You can reach us at info@capfund.com or check out our website. All right, so we'll just dive into a little more detail about myself, Capital Fundings, and then we'll jump into the investment opportunity. So meet me, Alex Bogomil. Here I am. I'm born and raised in Central Florida. I've lived most of my life in Orlando. I've spent a lot of time in California, maybe 5-6 years in California, a year in Nashville, Tennessee, a little in Chicago, and then made my way back to Orlando. So I went to UCF. I have a major in finance and a minor in accounting. So I've got a strong finance background. When I got out of college, out of UCF, I worked for CNL American Properties Fund, which was a large real estate investment trust in Orlando. Their headquarters are in Orlando. I don't know if anyone's heard of CNL. No? Okay. And then after that, I've worked for Deutsche Bank in California in their mortgage trust group, and then WFS Financial, which was the largest independent auto finance company in the United States. I worked for them for a few years, working in their securitization program. We did about $6 billion of auto loans annually with them that we securitized and sold off into the secondary markets. So that was, my corporate experience out of UCF, and around 2006, I kind of got over the corporate experience. I had a lot of friends that were making a lot of money in real estate, and that was intriguing to me instead of the long hours in the corporate world and trying to climb the corporate ladder. So around 2006, I met up with one of my best friends, and we opened up an office in Nashville, Tennessee, doing investment real estate, where we would find investment opportunities and mark them up and sell them to real estate investors that would buy and fix the houses themselves and sell them. So I was there for about a year and kind of got homesick at that point and said it's time to come back to Orlando. So I moved back with my other best friend, and we started a company there in Orlando, Home Pro Realty, where we did the same thing, buying and selling investment properties. It's considered a wholesaler is the term that they used for us. We were wholesaling properties. We were finding investment properties by all sorts of different means, marking them up, selling them to investors that would, take a loan out from a lender and then fix them up and sell them, hopefully at a profit. So I started doing the wholesaling, got into renovations myself as an investor, bought and sold a lot of properties, kind of to supplement the wholesaling income. And so over the years, I had bought and sold over 500 investment properties through the auctions, the county auctions, through foreclosures, short sales, through MLS, and then through off-market resources too. So we bought properties all sorts of different ways, and a lot of them. That was around 2008 where the market took a substantial dive, and there were a ton of foreclosures that we were buying and selling. And so we got a lot of experience doing a lot of different avenues of buying property. So right here below, I've personally renovated over 50 investment properties myself, and currently I partner with people, and I've done over 50 partnerships with other investors. So in 2013, while I was working as a wholesaler, I had one kind of like aha moment. I remember going to a closing, and then the buyer's lender just bailed, and you couldn't get a hold of him on the phone. He just didn't show up to closing, called, emailed, text, no responses, nothing. So, and I was just like, this whole industry is really bad at customer service. It's not very accountable, and it was just, you kind of flip a coin to see if they're going to show up to close for you. So I kind of recognized the opportunity. And at that point I was doing investments myself, and I was borrowing money from my older brother. And then I had a couple friends that were looking for money too, so they could fund their investments. And I got my brother to lend them some money, and so I was like, okay, I've got a business here, and that's when Capital Funding started. So 2014 is when Capital Funding started, and it's been growing slowly through 2017. Then you'll see a slide here, the growth really exploded. So Capital Fundings, so we're a private money lender specializing in lending money to real estate investors for the purchase, the renovation, and resale of distressed residential investment properties. We provide borrowers with the money to purchase their property and to renovate their property. So when we're making loans, we give them money towards the purchase. They're going to bring some of their own money, a down payment, typically anywhere from 20 to 30%, and then we'll lend them money also to renovate the property. So as they're renovating it and we're okay with the renovations, we'll release some of those funds. So they're now reimbursed, and they're not out of pocket as much. And that way it helps us ensure that the property is actually getting renovated. So some of Capital Funding's highlights: since 2014, we've underwritten, originated, and serviced, it should say over 1,075 loans totaling more than $180 million. Currently, we're servicing 225 loans at about $45 million. So since 2014, we've never had a loss, and we've never had a foreclosure. We're really conservative on our underwriting. We've got a A+ accredited business rating with Better Business Bureau, and it's not up there, but we've got about 125-star Google reviews, which as a private lender is unheard of. Most private lenders hover around like 3.5 to 4 somewhere as far as their Google reviews. We're a 5.0 rated. So I think over 120, we've had one review that wasn't a 5-star. So that's just goes to show you a little bit about our service and what our borrowers think of us. So in 2024, we're celebrating our 10th year in business, something we're really proud of. So what does a Capital Funding's loan look like? Well, first of all, it's a 12-month term, So it's short-term in nature. It's interest only. It's a recorded first lien. They're not second lien mortgages. Everything's recorded. There's a personal guarantee. Usually we lend to borrowers in a business entity, and they'll provide a personal guarantee as well. So if there ever was a case where there's a shortfall, we could go after them for a judgment to make up that shortfall. So every closing is done through a title company. They provide title insurance. Our borrowers are set up on ACH, so each month we pull their mortgage payments out of their accounts electronically, and then we hire an attorney for every transaction. We pay about $350. She reviews the title commitment, she reviews the loan docs, she reviews everything to make sure that that mortgage is intact and good. So how do we underwrite our loan? What goes into our underwriting process? We have one other guy, Capital Fundings, we have 7 people that work for us. We're downtown Orlando. We have one other gentleman who couldn't make it today, Constantine. Him and I underwrite all the loans together. So what goes into an underwriting of a loan? So we get a loan application, we require bank statements from our borrowers, we pull a credit report. Some borrowers, I actually can pull a background report as well if I feel I need to. We get borrower history. We want to see, has this borrower renovated properties before, or are they new to the game? That's going to adjust our terms. So we've got the driver's license. If they're buying in an entity, we'll get the corporate documents, operating agreements, bylaws, whatever it may be. We'll get pictures or video of the property, and then their proposed scope of work for the renovations. So I'm an investor myself, so I can look at all this information that they provide, and I can look at a scope of work. And if somebody says, I had one yesterday, they had a full renovation and they said $20,000 for the renovation. I said, that's not possible. So, that's where some of my experience comes into play. So pictures and videos of the property. We do a rental analysis. If we ever had to take a property back, does it cash flow? Right now with the interest rates, it's very important to understand what a borrower's exit strategy is. Are they going to be selling the property? Are they going to be renting the property? If they're going to be renting the property, are they going to be able to refinance into a new loan? Remember, our loan is a bridge loan. It's a 1-year loan. So these are all things that we're looking at when we're underwriting our properties. And then we've got the attorney reviewing it, and we do our own internal evaluations. It's one thing that separates us from some of the national competitors out there. A lot of our competitors are national, and they're ordering third-party appraisals. So we do our own internal evaluation. We feel like we have a better understanding of our current market. And we've got some figures to back up our valuations, our estimates that have worked out really, really well historically. So the other benefit of an internal valuation is we can close quickly. If I can close the next day if I need to, if I had to. I don't like to do that, but if I had to do that, where if you're a nationwide guy, lender, and you're making a loan and you require a third-party valuation, an appraisal, that could take 2 to 3 weeks depending on how busy the market is. So that provides us a little bit of advantage too. We're able to turn around deals really, really quick. So that's what goes into an underwriting of our loans. It's a lot of work, but as we've shown a few times already, we've had 0 losses, 0 foreclosures in almost 1,100 loans. So why do borrowers use Capital Fundings? People come to us, they call us, and they like working with us because we're local. We service, I would say 80% of our business is about 6 counties: Orange, Seminole, Osceola, Polk, a couple others, but we don't go that far out. We do a little bit in Tampa, and then we'll go to the beaches like Brevard and Volusia. But that's it. We don't go down south. We don't play around in Miami, Fort Lauderdale, any of those really high dollar values. We just don't go there. So our local borrowers come to us because we know the streets that they're doing renovations on. We've done renovations on there. We've done loans on their streets. And so we can provide some insight. I've got people come to me, hey, I'm going to do this house. And I tell them, that's not a good street. You don't want to renovate a house there. It's more of a rental area. So they like that, and when they like that and they see that we understand what they're talking about, they look at us as part of their team. We add value to them. They can make better decisions with our insight. So that's one reason. Our investment background, like I just said, I'm an investor. I've done over 100 properties myself and with partners. So we understand renovations. We can look at pictures and say, hey, you're missing your roof on that, or you're missing your AC, or the windows are old, they need to be replaced. So we just provide a lot of insight to our borrowers, and they enjoy that. So what I just touched on, we're fast. We can close in 3 to 7 business days. Most people are 2 to 3 weeks. So that gives us a competitive advantage, because a lot of investment deals, the way the investment world for the single family houses work is they're buying houses and they usually have to close within a week. So a lot of other lenders, if you can't close within a week, you're not even considered. So that gives us a little bit of advantage. And then our 5-star Google reviews. Like I said, we've got over 120 5-star Google reviews. People walk in our office all the time. Hey, I found you on Google. You guys have great reviews. Let's talk. So what does all that mean? Our borrowers, it means that we have about just under 80% repeat borrowers. So 80% of the loans we're making are to somebody we've already made a loan to. And that really helps us reduce our risk. We have comfort with them. We know their quality of work. We know that they satisfied their last loan, and that it reduces our investors' risk if we're lending to people that we know instead of people we don't know. A lot of the nationwide lenders that we compete against, they've got a network of brokers that are out there making loans that they may not even be in the same state, so they're not adding anything, and they're motivated on a commission. They're trying to close a deal to make a commission. So they're not always working in the best interest of a lender. So we don't go that route. We're a local lender. We want to be the expert in our area. We want to provide knowledge to our borrowers. We want to provide, anything we can to help them be profitable so we get our money back and we can keep lending. What makes a capital fundings a safe investment? Not all private money lender investments are the same. When comparing lenders, ask the lender what's the loan to after repair value and their loan to sales price statistics. This is kind of what I referred to earlier. When we lend money, we only lend money towards, not all of the money towards the purchase. So if you're coming to buy a $200,000 home from us, I'm not giving you $200,000. I'll give you $160,000 if you're an A+ borrower, is what I can see. And then you're going to bring that $40,000. So you've got skin in the game. So if people are lenders, you kind of want to see, all right, what ratios are you guys lending at? And for us, if you look at the after repair value, what we're estimating from our internal valuations, what we're estimating the property will be worth when it's renovated, we tend to be between 60 and 65%. So that means when we're going into this loan, we think there's 35% equity after the renovation's done. So another way to look at that is if prices drop 35%, the loan is still safe. So that's our loan to ARV, and that's an estimate that we make at the beginning. Our loan to sales is based on actual data. When the borrowers sell their property, we take that information and now compare that to our loan amount, and it's actually been lower than our initial estimates. It's sub 60%. So that means that we're actually being conservative on our estimates of our ARV because the real stats are coming a little bit lower. So at 60%, that means there's 40% equity when they go to sell the property, which means that's a pretty safe investment when you have a 40% amount that the prices could drop before your loan becomes affected. So most lenders that we compete with will go up to 75% of the ARV. They'll also go up to 90% of the cost of the property. We never go past 80 on the cost of the property. We like to be, especially if they're newer borrowers, around 70%. So if you're a newer borrower with us, you're bringing 30% of the purchase price to the closing. So 2023, our average of our loan to after repair value, which is our internal estimate, is 62%. So what does that mean? We require our borrowers to put more of their cash into their purchase than most other lenders, which makes Capital Funding's loans less risky for our investors. To continue on, what makes it a safe investment, attorney reviewed. Local loans, we're not trying to do loans in markets we don't understand or know. We're not in South Carolina, we're not in Atlanta, we're not in any of these places that we have no idea. We've done a lot of properties ourselves. We've done almost 1,100 loans, all in these areas. After a while, you're starting to see the same streets and the same zip codes, and everything's, it's just more and more knowledge for us. So that helps. That makes it a safer investment. And it plays out. Historical track record since 2014, 0 losses and 0 foreclosures. I believe this slide is in the book that you guys have. It's probably a lot, but it just shows annually, kind of what our portfolio has looked like. Average loans, average FICO scores. We tend to hover right around a little north of 700 for an average FICO. But we've got a lot of statistics that we track. Didn't include them all in the presentation, but they're definitely available upon request. Here's what I was referring to earlier about the loan to after repair value, 62%, 61% in 2022, 61%. What you're going to see is that we're consistent. Our underwriting hasn't changed. Even when competitors are out there offering more and more money, so the borrower has to bring less money, we haven't changed. We're counting on our repeat borrowers. We're counting on our relationships to where we don't have to really give people, the last loan crisis in 2008, everybody was giving everybody 115% of whatever they wanted, and that can create problems. So what these slides show is that we've been consistent over the years. And then this is the actual data, our loan amount to the sales price. What did our borrowers sell the property for? And we're sub 60. You can see each year, 2023, 2022, sub 60%. So there's 40% room there before the loan comes into question about getting our principal investment back. Here's our annual originations. 2014 was just a thought and idea I incorporated. In 2017, one of our major investors that we have now that's local in Winter Park, Florida, he's got about $35 million with us right now invested. He came on board. He came on board very slow. And as we built trust with him, he became more and more comfortable. Each month right now, he's making over $250,000 a month as a monthly ACH to him. So 2022, we were almost at 50 million. 2023, the overall market was down 30%. Capital Fundings was down about 16%, I think was the numbers. And we are really kind of capital constrained. This is where we came up with the need for the fund to raise additional capital. So we are kind of limited on our originations by our capital constraints. All right, so Capital Fundings versus other lenders. We've touched on all this. Average ARV, 62% of our average ARV is the loan. We require borrowers to put more of their cash into their purchase than most lenders, which makes it less risky. Everything's attorney reviewed. Local loans, we understand the market, and zero losses or foreclosures. So most lenders are going up to 90% now the cost of the property and 75% of the after repair value. That just means if anything goes wrong, we've had increases in supply costs, material costs, labor costs. With the interest rates, what happened when the interest rates went up to 8% recently? That delayed a lot of closings. People couldn't get mortgages as quickly as they could before. So a lot of investors that thought they were going to flip a house in 4 months became 6 months. So their profitability went down. So you don't want to lend all the money to everybody, because if something goes wrong, then it's going to be the lender's money that gets eaten up. So we're staying conservative. We're staying consistent and conservative. So 2022, as we are growing with our direct investors, we realized it's probably not the most efficient way to do business is where we sell loan by loan by loan. It's a lot of paperwork. It's a lot of our direct investors getting their time to sign a lot of documents consistently. I mean, if you have 100 loans with us. You're nonstop signing satisfactions and new loans and stuff like that. So we started working with industry professionals, industry attorneys, and we came up with the idea of the fund. A lot of lenders are doing funds. It's a more efficient vehicle. So we started working with probably the main attorney in the space, they're out in California, to create the fund so we could raise additional capital. We could create this opportunity for other investors, accredited investors. So Capital Funding's Mortgage Fund 1. We started investing in 2023 into the fund, and it's a monthly distributions. So just a little bit about the fund. It's a high yield mortgage fund that originates mortgage loans to real estate investors. The mortgages are typically short-term, first lien, renovation and construction loans in the Central Florida area, primarily for single and a few multifamily residential properties. Investment parameters are going to be the same thing. Nothing's changed in the fund. We're still originating all of our loans the same exact way. We're just, when we originate them, we put them into the fund now. So loan amount, typically our average loan amount is about $200,000. And most of those loans will include some money for the renovation of the property. For us, it's safer to give our borrowers money for the renovation of the property, because when they want that money back, we send our inspector out there. They look at the property, they take pictures, they report back to us. So we can stay involved in the process, and we know if something's going wrong, or if, sometimes there could be red flags. If somebody does a demo of a house and says, I want $40,000, that's not right. So we're actively involved in those loans where they're doing the renovations that we provide them money. Term it says 12 to 24. Everything we do is a 12-month term, all short term. If we extend a mortgage, we add 1% and we charge a fee. And we'll also do an underwriting, a lighter underwriting at that point, just to make sure that we want to extend that mortgage. We do have some people that will extend mortgages. Primarily, borrowers that extend mortgages are ones that are going to keep the property as a rental property, and they don't like the interest rate. So they want to extend this mortgage before they lock into like a 30-year rate at a higher interest rate. So interest rate, can you go back one? Yeah. So same thing as before, interest only, 12 months, first lien mortgages, use of the proceeds, acquisitions, refinances, and rehab. So here we go. 2022, we started working with the attorneys and the fund administrators to create the new fund. The fund is a vehicle to raise money from accredited investors. We pull that money together and we originate loans into the fund. The fund has a monthly distribution of the fund's income to investors. We distribute all of the income each month. It goes out, usually there's a 1-month lag, and it goes out at the end of the month. So our annualized target yield of 9 to 11%. In 2023, the last month, we were at 9.99% before any taxes. So we're getting there. We need to raise more capital in the fund. The next slide will show it. Income into the fund is from borrowers' interest payments, origination fees. Typically, we charge 2 points to originate a loan. So if they're borrowing $200,000, we charge $4,000. A percentage of that goes into the fund. The other percent goes to pay our underwriters and our overhead. So extension fees, late payment penalties, gains if we did have a sale of real estate, all that would go in as income into the fund. Expenses of the fund is our management fee, and if we had to take back a property for a foreclosure, any fees or expenses related to that would be an expense. So right now, for this year, we've been waiving the management fee. So as we start to accumulate more capital into the fund, right now we're at about $6.2 million in the fund. As we start to accumulate more, we'll have more consistent originations, and that's what we think will help get us closer to the 10, 11% consistently. I think for 8 months, the return, it's in the book, but I think the return was 9.55% maybe for 8 months for 2023, our first year. So this is another thing that's really nice about the fund. All of the fund accounting and distribution calculations are handled by third-party industry-leading fund administrator. The company we use is called High Divide. They're out of Kansas City. And so they do all the accounting for us. We provide access to our bank accounts. We provide access to our loan servicing software. They do all of the accounting. They calculate the distributions. They're CPAs. So it's not us where we're not CPAs. We're lenders. And so we've got experts that are doing it. Each month they put out unaudited financial statements for us, balance sheet, cash flow, income statement. So we get this each month. So we really, it's nice to know that we've got professionals doing all the accounting and they're calculating all the distribution amounts and who gets what. So that's a really nice thing about the fund. You know, outside of the fund, we're doing our own accounting, but this is really, really nice. So the fund provides monthly unaudited financial statements, a monthly fact sheet. I think a copy of it is the last page of the book that you've got. And then annual audited financial statements. So what we're trying to do is we're trying to be transparent to our investors. If you've ever invested in a private equity fund or anything like that, transparency usually is not there. Usually you give your money and you get money back and you really don't know what's going on. We don't want to be like that. You know, so we can provide the monthly financial statements, we provide the monthly fact sheet, and then most of the other funds, you're not required to have an audited financial statement at the end of the year. We're doing that. It's an added expense for us, but we feel it's important to our investors to know that they've got an audited financial statement. And those accountants are out in California. They specialize in REITs and they specialize in private equity funds, so they really know what they're doing. So one other major advantage of the fund is that it classifies as a REIT structure for income tax purposes. If you've never heard of a REIT before, a REIT is a real estate investment trust. It's a vehicle that owns real estate assets, including mortgages. It receives special tax. We don't pay taxes on it as it's classified as a REIT. And then the income that's generated from the REIT that we distribute to our investors receives a 20% discount from the Jobs Act of 2017. That expires in 2015. We're hoping it gets renewed. We'll see. Probably will go as the election goes. You know. So these numbers, I'm not sure if they're in here. It's a little small to see, but $1 million. This is just for presentation purposes, returning 9%. So after tax, you would get $54,360. With your tax benefit of the REIT, it's $63,360. So almost a $10,000 extra in your pocket after taxes. So the REIT is a really nice thing. It's totally something you guys don't even see as an investment, but it's something that our accountants handle and gets us classified as a REIT, and so you get the 20% discount. And here's the table we included. I believe this is included in your package. Depending on your income, it'll give you the tax rate, and then it's your adjusted tax rate based on the REIT income. So it's 20%. You could go from 37 to 29. I spoke to a gentleman earlier that was at 22, and now it's 17.6. That's only the income that you receive from your investment. That's not all of your income, just the income from the investment. So benefits of investing in Capital Funding's Mortgage Fund 1, it's passive investment in the real estate market through mortgages, consistent monthly distributions, a high yield target return of 9 to 11% while preserving your principal investment. The REIT structure provides the 20% discount, and it's the investment in short-term mortgages. Sometimes if you follow REITs, they get a negative connotation because they're invested in long-term mortgages. And when you're invested in long-term mortgages, you have interest rate sensitivity. So if you have all these investments in 10% mortgages and then interest rates go up to 15, the value of your REIT isn't worth as much. So we're short-term mortgages. When our mortgage is satisfied, we reinvest at the current rates. And if people extend their mortgages, we add a point to their mortgage interest rate. So that helps offset as well too. This is the structure that we've set up. It's a legal structure, maybe a little much, but I just wanted to include it. So it just shows investors contributing money to the fund that we put down into the REIT and that we lend out to borrowers. Borrowers then pay their monthly interest payments and principal when they satisfy to the REIT. It goes back up to the fund and then back to the investors on a monthly basis. This is us, the management company. We do all the underwriting. We do all the management. We kind of take care of everything related to the portfolio.
My name is Gaurav Mukherjee. I'm sort of an entrepreneur in many ways, from being an attorney to working in real estate. Also spent a lot of time working in cybersecurity. And I've actually been with Cap Funding maybe before it even had the name Cap Funding. And my family office has put together a portfolio. We started small, one loan, just like everybody else. And then we built that process up. In terms of number of deals, we've done over $100 million in deals. It's really great, and Alex makes it very easy for us. But the one thing I would say is that, you don't have to have $100 million to invest with Alex. When it comes down to it, the investors come back to Cap Funding, and that's because their product is solid. They always close, they always make sure the investors are taken care of, and they always make sure that the borrowers are taken care of. And I think that's really important to have that track record. About a year ago, my dad decided to retire, worked a very long life, and he turned around and said, he's got some retirement funds, he wants to know where to put them. I recommended Cap Fundings. I did. And not just because I've been investing with them, but because I want to make sure my parents have that nest egg for them in their retirement years. And they started small, and they've been investing with Alex as well, and they're very pleased with it.
My name is Karen Parslow. I've been in real estate for 10 years. I mostly do flips now. I try to do 20 a year, but I also have rentals in Orlando. I have been an investor with Capital Fundings since they started about 5 years ago. My relationship with Alex has always been great. He's always there, professional, on time, organized. He knows his stuff. Also, the fact that Capital Fundings is local, it's always great to have someone right next door. Anytime you have a question or you're in need of clarification of anything, he's right there. I would recommend to invest with Capital Funding because their communication is great. They're always punctual with the payments, and it's just something solid as an investment that kind of gives you peace of mind. It's been a breeze.
I'm Dr. Ben Lerner. I'm the CEO of HP2 Medical. I'm a consultant. I've written 2 New York Times best-selling books and actually teach other doctors how to manage their finances. I've been investing with Capital Fundings for a little over 2 years now. I'm a busy professional doctor, and so when you're doing a lot of different investments, you don't want to have to put in a lot of time, connect all the different people, get the money from the bank to the investment, from the investment back to the bank. So they've done a phenomenal job working with our investment advisors. The whole process is extremely seamless. I would recommend Capital Fundings because they have a great track record, not just with me, but they've done an endless amount of loans. They focus on investors that they've worked with before, so they can trust that these are people who will fix and flip and sell the house, so you know that your money's secure. They are very upfront with, here are the properties and here's the credit score of the people that want to borrow, and they point out exactly what locations around the city that you're investing in. And we've now done this many, many times, and they've all been completely successful.
My name is Waveney. I am a retiree. I used to be an HR consultant. We've worked with Alex on about 19 houses. I met Alex through a cousin of mine. I'll actually never forget that because Alex helped us through a short sale. That was the first home that we bought. I didn't have all the money, and Alex wasn't doing personal loans at that time, but he was able to help us to get that mortgage and pay it off within a certain amount of time. Then the pandemic happened, and the real estate market had become very volatile. We didn't actually do any business for a couple of years. Then we became investors with Alex. We were able to get a steady stream of income. We basically sit back and enjoy that. It feels safe. We're not battling with the real estate market. Trust is everything with Alex. I know that I can sleep at night, and we enjoy that.
My name is Katrina Ederson Bogomil. I'm Alex Bogomil's wife, and I am a vice president and part owner of AA Concepts. One of the most important things about capital funding that I have really cherished is how I've been able to give back with the interest money that I've made off of capital funding, Mortgage Fund One. So I've been able to change my parents' lives and my sister's lives just by helping them with the money that I've received from the investments, which has been really helpful for our family. It's just been something I've watched my parents be happier. So that's been really special. I had all this passion about taking risk and investing and doing all these things, but when I met Alex, he was one of the safest bet I've ever made, just because I trust him. You know, I don't feel like anything that I do with Alex or capital funding or his team should be ever unnoticed, because it's like one of the best investments I've ever made.
So if you have interest in the fund, you know, what are the next steps? You know, usually we just have a commitment, and then the fund is for accredited investors only. So we get a accredited investor verification, and then we send out our subdocs to our investors where they can review those. It's the operating agreement, a subscription agreement, and a dividend form. And then they make the investment, and then from there on, it's monthly distributions. We try to make it super easy, super passive for our investors. But as you can see, you know, we've got a passion for local lending, and our results have really showed that we really care about what we do, and it's been a great growth story. The company's been a lot of fun, and you know, we're trying to keep it going and raise money in the fund.